to the Investing Podcast presented by Tusk Media. For a quick audio and video check-in on the stock market, here's the Stock Market Power Lunch.
Good afternoon, everybody. Welcome back to the Investing Podcast presented by Tusk Media. Today is Tuesday, June 7th, 2016, and this is the Stock Market Power Lunch. Now, we didn't come at you with a morning market mimosa this morning because we had a really big, important, incredible long-form podcast that went up last night. We wanted to give you guys time to digest that. If you have not heard it already, I don't know what you're waiting for, but go ahead and download it. If you're on iTunes, hit subscribe, and that way it just shows up on your phone or on your computer whenever you're ready to listen. So it's up there. It's actually a conversation between myself and the founder of Narwhal Capital Management, Matt Burton. For those who don't know, Narwhal is actually Tusk Media's parent company. So we sat down and chatted for about 30 or 35 minutes about common investing pitfalls. It's a pretty good conversation, if I do say so myself. We talked about things that plague investors, both professionals and individuals alike. So I think you'll enjoy it. So check that out. If you're listening on iTunes, leave a 5-star review. We will read whatever you say on air, whether it's good, bad, ugly, or just awkward. As proof of that, on the podcast I just mentioned, the long-form podcast with Matt Burton, we actually read some of those at the end of the episode. So check that out. Again, hit subscribe no matter where you're listening. Let's jump in. Let's talk about the market. Let's get caught up because we didn't tell you anything this morning. The good news is the markets are up. Equity markets are up across the board. Even the NASDAQ has finally moved into positive territory for the day. Even just a few minutes ago, it was actually lagging, but it's now up 6 or 7 basis points. So a small move positive for the NASDAQ. The S&P 500 is up a little more than 1/3 of 1%. The Dow's up close to 0.5%, up 43 basis points. Global Dow's up. Gold, as you might expect with all these equities running away, is down a little bit, down about 1/3 of 1%. And oil is up nicely, up about 70 basis points. And we'll talk a little bit more about oil in just a few minutes. But first, we're going to highlight a few stocks that are doing well or doing poorly today. So first one up, American Airlines. American Airlines announced that they are altering the way they count points and reward dollars for their frequent flyer program. They're no longer measuring purely by miles. So it's no longer a frequent flyer miles program. It's now a frequent flyer dollars program. So they're going to reward people who are spending more money on airline tickets. That's a good thing for a number of people. People reserving tickets later are now going to have to pay a premium, which they always have, but they're actually going to get rewarded a little bit more for that. So that's nice. This is viewed as a positive thing for the airline, and the airline stock is up a little bit more than 3% on the day. So sounds like a customer-friendly program. We support that here at Narwhal Capital Management. BIIB, Biogen, got poor results on a mid-stage drug test for a multiple sclerosis treatment. So the stock is really taking a beating on that news. It's down almost 12% for the day. Disappointing results within that study, which probably is a more meaningful and more lasting impact than the actual result of the stock intraday. So sometimes it's easy to lose sight of what matters. The most disappointing part of this is that a possible treatment for MS is not as far along as they thought it might be. Moving on, Ralph Lauren, having a rough day, down about 5%. But they gave us an opportunity to play a game that we're going to call good versus bad. So what we're going to do is we're going to run through some talking points related to Ralph Lauren's stock and announcements that are coming today at Investor Day. We're going to decide if those are good things for the company or bad things for the company, and we're going to try to figure out what exactly is going on with the stock and why it's down so much. So first up, high restructuring costs. Ralph Lauren is estimating that in 2017, it'll pay upwards of $400 million on restructuring the company and kind of changing the outlook for it. Is that a good thing or a bad thing? In the short term, at least, that's a bad thing. Anytime you see high cost, doesn't matter if it's in your personal balance sheet and your personal budget or if it's with a company, it's usually not something to be too terribly excited about. Quarterly net revenue decline for the first quarter declined year over year. Is that a good thing or a bad thing? Anytime you see revenue declining, that's going to be a bad thing. Shrinking margins, another thing. You can probably tell where this story is going. Shrinking margins, getting smaller, making less money on every dollar that comes in, not a good thing. It's a bad thing. And they're now projecting a full year sales decline. Guess what? Bad thing. So bad news kind of across the board for Ralph Lauren. We also got a little Connect 4 action here, 4 in a row. One up tic-tac-toe. Way to go, Ralph Lauren, on the negative side. So Ralph Lauren's down about 5%. On the upward side of things, we do have oil breaking through the $50 mark per barrel. We've been talking about this for a couple weeks. It finally got there. The big news about that being north of $50 is it now means that oil is 100 times the man that 50 Cent is. So congratulations to oil. Solid day being up to that $50 mark. We'll see how long it stays there. Again, it's been kind of trying to work back there for about 18 months. We'll be back in a little bit with the Investing Happy Hour. Thanks so much for listening. Again, hit subscribe, leave a 5-star review. We'll read it on air. Talk to you soon.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.